Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, July 18th, 2024. In this video, I'm going to cover, I'll give you quite a bit on the equity markets today, but I'm going to start there. And I'm actually going to start out with my trading plan because somebody asked me about that, reversing off the trend lines today, the downtrend line support, and looking to try to thread the needle for a bounce. Nothing's changed. Actually, things have changed. I've only become a little more bearish for longer term and think the odds are even better now. But we're still, I'm going to go over the levels that have to be taken out to open the door for those longer term swing and trend targets. But with that being said, I'm going to recap everything that's gone on this week. Tomorrow's Friday. We're going to have some weekly candles printed. We'll take a look then. Things may change for the better or for the worse for the outlook of the market, depending on what happens with some key stocks and key indexes tomorrow. All right, but let me start here. I got a post out to which I'll get to in a second on the S&P 500. But somebody asked, hey, when would you go back short if things don't pan out? So this is the uptrend line on NQ, my preferred trading proxy for the Nasdaq 100. I'll get to QQQ in a second. Here's that support zone or support level just below it. And so if you look closely, you really have to look closely. But again, if you have to squint, we close, well, you can see we close right on, we're right on. Remember, these futures keep trading after the close, but we're flat. We close today and we've gone nowhere. Positive divergence on that 60-minute chart too, which means that could be the catalyst for send everything back up to at least this trend line here. I'll even say it. I mean, and I've said this many times for almost a year now. These 60-minute divergent lows have been the catalyst for new highs in the market. Now, you don't have it on QQQ. I like it all the better when I see it on both SPY and QQQ as well as the index futures. So this is a 60-minute futures, and you do have it there, positive divergence at support, both trend line in. We kiss that price support. Again, a little momentum field overshoot. So here's my plan in a nutshell. Things can change, but not, if I go to sleep tonight, that's where we go. I am going to have a few staggered stops relatively tight. We should not violate today's lows. Sometimes they'll go at you and try to get in the overnight session when liquidity is much thinner than the regular session. The powers that be can go after that. So I'll just have a stagger, probably 2 or 3 sets of stops that will take me out, and then I'm not going to go. Sometimes I will stop and reverse, go immediately into shorts. And again, these are going to be OCO orders. They're going to be limit orders. Stop loss orders. Good to cancel. So and set, as I always do with my futures, to be filled outside regular trading hours. So if it's 3 a.m. that happens, I don't have to be there. And I could, it's easy on interactive brokers because if you're net, if you're net short, let's say 10 NQs or whatever your number is, and then you want to turn around and go to 10. Your net, let's say right now, net long 10 NQ contracts, and you want to go net short if you exceed a certain level, you just put a stop loss order, a stop loss to sell 20 at that price, and one execution, it'll sell 20 contracts at NQ. It'll take your 10 long and then give you another 10 short, right? That's how that works. Easy peasy stuff. Again, interactive brokers geared towards professional traders, so you don't have to do 2 separate orders. It's not 2 separate commissions and all that. Anywho, that's the plan right there. And then, no, I'm not going to reverse overnight. I want to see what's happening. I want to see the regular session. So if they pop it here and we crap out tonight, we're probably going to go down to the next support level, and then I'll assess things at the time. How does SPY look? Is it at the, remember I gave you an update today that although QQQ and NQ were on the trend lines right there, you can see it here on the daily chart. You can see it right there, close right on the trend line. SPY, let me go down to the 60. SPY, and there's QQQ. Again, a hair below as I have it drawn there, close enough. And so you have SPY, as I gave you that update before the close today. The way I had the trend line drawn, I have it coming off the same April lows, mid-April lows. There's a very little shadow there, a skinny part of the candle there. So that's why the trend line's a little lower, but this is also a very good price support, about 550.18, as I covered before. You have this trading range and a breakout, and now we come back to that. And then the trend line's just below it. Should they want to punch the things down in the morning, and then reverse. We could hit that. That's certainly a possibility. Now, anything much more than that, that's going to open the door for a deeper drop, and it's also going to do technical damage to the daily charts, the more significant daily charts. But as of now, favor a bounce, tradable bounce, as I have all day, and we kind of close the day where we the only thing that most of what happened today, if you look at the markets on a very short term view, is this is where we hit this morning. That's where I reversed. The Qs went sideways all day, but then what happened is finally the rest of the market played a game of catch up and kept moving lower. This was SPY, and SPY, unlike QQQ, which went sideways when it hit that, SPY went down because it had more business to complete, meaning it hadn't yet hit comparable support levels, and it did right before the close. That's why I got that out to you. So that's it. It just it just helps the case for a bounce now that SPY, because SPY earlier today was way up there and had quite a bit. And again, there's a little bit of downside from today's low to that trend line, a fraction of a percent, not much. Let me show it to you on the futures. Yes, basically a perfect tag of that trend line there, and you could have another thrust down. And here's a trading range right there. So, but look, if the trend line breaks, ultimately, I believe we're going a lot lower, even if it means a breakdown and a back test. I'm talking a solid break. We're going to go down to those deeper targets I have in relatively short order. That means weeks or months. But in the near term, this is good support as well. So if they do take out the trend lines tomorrow, you're looking at really good support right here on ES. That's 54.42-ish. I'm going to measure it for you. I hate when this happens at this platform. I got to grab somewhere else. I got to do it like this. Make the line and put the line there from the trend line from today's lows. If broken, that's all. It's only about another 2.25%. So it's not much, and that's good support. Let's see where the line's on SPY. So right here, same thing. I'll grab there. 1.5 right there, down to about 2. And then here's... so you can see all these support levels down here, and then you can also go out to the daily chart. But remember, we take out on the daily chart, I don't have all those micro levels. This kind of, when we get into this mode where things start breaking down on the daily, if you recall, and you go back months, most of these sell signals I've given you and buy signals and reversal points, I went long or short, were based off 15 and 60-minute charts. Those are the realm of the kind of short-term moves, short-term swing trading moves. This is a daily chart. This kind of paints the bigger picture. And you can see, although there are micro levels in here on the 60-minute charts and 15, pretty much when this level goes with conviction on the daily, minor zigs or zags, and I think it'll be pretty quick, we come down to T1, which is, let me measure it for you. That's going to be a drop of about another 5%. Then we hit a nice, we hit nice price support there, and a key Fibonacci retracement level. Remember, I give you those. Then the next stop is down here, and so these are much bigger moves. And then if that happens, it's like that app on the phones, IFTTT. If this, then that. That's an app, technology app. It'll trigger things. If you're come home and your phone recognizes your house Wi-Fi, open the garage door with your smart opener and all that stuff. You can set up all these cool little things. But then, so what I mean by that now on this, if we go down here, we've now solidified some longer term sell signals, especially if that happens soon. We'll get some extra sell signals on the weekly chart, things like that. And so bounce or no bounce, it's going to increase the odds we come down to the next target or targets. And that's how that works. As of now, again, this is nothing more than a mild pullback right now. Okay, it's a 3, not even 3% off the highs on SPY. It's better than 5 on QQQ, given that. Like I said, text problems may not, up until today, they weren't the problem on the stock market. Again, I just showed you the market finally said what I said it would do, would get the memo that, hey, financials doing great, banks doing great, everything else is doing great, just about all sectors, check, up to yesterday, we're doing great. But it started to matter when day 2, the tech wreck, people, it's that, you're going to get the sell programs hit and people taking profits and stops getting hit, and that's what happens. And then that selling in tech, like it or not, will spill over to the other sectors simply due to its importance in the stock market with the weighting and the psychological reports. But that's it, guys. So there you are. There's your levels. There's my trading plan as of now. Trying to thread the needle, looking for a bounce. It could be pretty decent here. These are these were support levels on the way down, and now they're resistance levels on the way up for SPY. I gave you some bounce targets earlier. Let's just say right now, just eyeballing this 60-minute chart, that'd be about a max bounce target for the S&P or SPY. Be up there. It's not much, about a 2% bounce. Come and test the bottom of this gap right here. Anything's possible. Look, I'll tell you now, if we get up and we start to come up here and back test the wedge, and I'll be pointing that out as an objective entry, we'll still be in my market top range zones. This is where things start to change for me when we get, as I've said, final market top range, which SPY only went about halfway up. QQQ went almost all the way up. We get much above there. We'll see. If the technicals change, I'll let you know at the time if my outlook changes. But as of now, I'm focused on what's happened lately, and there's just been a plethora of bearish evidence and technical developments, that is. Alrighty, so that is my plan. I think I gave you bounce targets earlier on the NQs. If not, here we go. NQ tonight, if it can pop this level here, roughly about 19,912, 913, it should run up. At least I'm looking at a move to this downtrend line and this intersecting about 21,162 level. That would be certainly a nice target to hit overnight or tomorrow morning, should the markets hold up and not melt down and take out the lows and take out these divergences. You can see them here on the 15-minute chart too, positive divergences. So those are near-term targets. If this thing can get some teeth on a rally, this would be a level I'd love to see to start putting back on some shorts and close out any longs, because sometimes what I'll do when we get to this level here, it's a little harder overnight. I'll have to make a decision. Do I put a hard sell limit order there? In other words, I do an OCO order. Stop there with a sell limit there, and OCO says one cancels the other, whichever gets hit first. If we crap out overnight, I get stopped out. If we go up, I can either set a sell limit here, or if I'm, it happens tonight before I go to bed, I'll just ratchet my stops up and let it run for the potential. Because if we do run up here, and I think we will overnight, I think there's a good chance, we'll probably head up here. This is what I'm targeting right now. This is what I'd like to see. So I may just go to bed with an OCO. That's what I think I'm going to do right here. If it hits there and reverses, then so be it. I'm gonna do this video, which is me analyzing the charts kind of in real time, and I'm also going to study them a little further. But I can tell you right now, that's what I'm looking for. Ideally, I'm looking for a bounce back here. Let me measure it out for you. That's from the lows today. It's going to be about a 3% bounce. And let's see if I have any other trend lines or anything that come in with that. Let's draw one off the highs. These two reactions, yeah, that should, by the time it gets there, remember the market, goes down fast and it goes up. It will zigzag up and it'll come in like this, and so that should get there maybe by the close Friday, and that would be a nice level to exit this long trade and then get back short for the hammer down maybe next week if we get it. We'll see. All right, let me just make sure I covered the 60 and haven't missed anything. So that's that same minimum target level, and then I already had it drawn here, the maximum target level on the NQs. And for you QQQ traders, I know there's more of you than us futures traders. Let me give you that. Big old gap right there. There's your, there's a minimum target right there, which is the bottom of my market top range, remember, and it's also this trading range here, the top of that range, and then you have the downtrend line, comparable downtrend line I just gave you on NQs, which is kind of what I'm going for, which would also be close to a gap backfill. So keep it simple. And I wouldn't go, this is technically the top of the gap right there. That candle, there's where we closed on Monday, right? Tuesday. but all eyes are going to be on that. So if you're targeting up there, I'd have a sell limit a little bit. You don't want to you want to get out before everyone else starts trying to cover that, sell their longs or short on a bounce back to the trend line. So a little bit shy of that's probably your best bet. And that's going to give you, if you bought this thing today on or around the trend line, it's nothing much, but about a 3% addition to whatever you swung this down short and covered, and then watch, rinse, repeat. So when if successful and you can sidestep these little give backs, it's a 6% net boost to your return, because you gain, you cover, you sidestep a 3% loss or give back and turn that into a 3% profit. Actually more than that, and then you turn around and that's another 3% back down if you short there, if it plays out that way. I know I'm probably getting a little too micro. I don't usually get this micro on my trading plan, but that's what it looks like now. That's what I think is a good chance of happening. All right, let me get to everything else. Let's just rifle through the market leading things. Let's do it on a weekly like I did yesterday, just to see where we're at. Let me move this up. Somebody mentioned on the site in the comment section, yep, absolutely, a potential bearish engulfing candle for Apple. And so we'll see. Again, Apple has some work to do. If it can rally up and get the bottom of this candle, this candle we're working on right now, that'll be finalized tomorrow, above the bottom of that, the bottom of that candle right there, the fat part, then there's no bearish engulfing. Otherwise, you're going to have a bearish engulfing. If tomorrow just market craps out, you have the potential to take out this trend line. What I can say definitively is right now, Apple tested successfully today at the lows this uptrend line support on the weekly. So there's that, and that we'll talk about it tomorrow, or somehow if I forget to, just check that candle. Is it going to be a bearish engulfing? And then boom, you have the same strategy that you could do on the daily charts. Remember, on the daily, I highlighted the recent bearish engulfing on QQQ. It works the same way on the weekly, except weekly chart. If you're trading off the weekly time frames, you're not looking at little 4-3% counter squiggles. That's the realm of the active trader like me trading the 60-minute charts. This is the trend trader's chart. This tells me you have a big divergent high on Apple, multi-year, one of the biggest divergent highs I've ever seen on the stock. Been building for a while. I have big downside targets, this primary uptrend line right here. So I think before all said and done, Apple falls 50+%. I know that's heresy among you Apple bulls, but I'll do this like I've done 100 times before. You can see it time and time again, 82%, 42, 62, 45, 34, 39. It's certainly possible, and even if not, there's going to be plenty of stops along the way. So whatever. Again, take it as you want, and this is pretty big. Look, even a minimum target right here, this was a breakout level. If you're just looking for a shorter term swing target, about 199, call it 200. That was a breakout of this level. Maybe Apple wants to come back and test this and go off to the races, or not. All right, let me go through the rest. Spending too much time on Apple. Microsoft coming up on trendline support, but not there yet. But it also has broken down, as I covered recently, below that trend line. I covered all these yesterday, so I'm just going to rifle through these. Where did it go? Where did my charts go? Here we go. Microsoft, NVIDIA still, as I covered yesterday, below the uptrend line. So that's a weekly. If we close below it tomorrow, then it's a sell signal on the weekly chart. But it's also fighting tooth and nail on my key, or so far it's now a much more important support level than before, because we've tested it multiple times. I'm talking about my minimum target zone, hit here, hit again, the top of it, and we've been dancing on it. And as I mentioned yesterday, really no change. We're pinching between the downtrend line and that level. So these are, if you just want two levels to watch, set price alerts right there. The recent lows called about 116.78 and the downtrend line. It's simple stuff. Now you could have a false breakout, but otherwise you break above that, they're probably going to want to run, and they've got a gap to fill just like QQQ. So there's a potential bounce target. Here's a big gap. If NVIDIA wants to enter the gap, the bottom of the gap's here, the top's here, it may want to backfill that gap. I still maintain these deeper targets, but as I've been saying, and I always do say, I list multiple targets because they're each support levels that are likely to produce a reaction. You're not going to hit T2. You cannot and will not, or T3, unless you take out T1. T1 was hit, and we need to take it out. So that's that. So, boom. simple stuff. A break of the recent lows, unless there's a reason to be long the market or not be shorting it in other market stocks. A break of this level should take us down and should do it in pretty quick order down to T2. Okay, as of now, like I said, there's a case for the bounce of the market. You've probably seen a video and sympathy go up with it, but who knows? All right, next up, Alphabet. And let's go back to the weekly we were on. Boom. Just a big, beautiful wedge. I covered it yesterday. It's just even more red today, down another 1.8%. So as of now, Alphabet would have to rally at least 6% just to get parked back on the trend line and make this a whipsaw. In other words, to get a stick save, we call that in trading, just like the hockey stick save, except talking about candlesticks here. So boom, that would be that. And I don't think it's going to happen. Amazon could do it. Amazon needs to rally a solid red candle through the weekly trend line, also about 6% to get back and stick save tomorrow. Certainly possible. Same with Meta all day. So you can see, as I covered yesterday, majority broke down. Tesla, as I said, the big level I'm watching and expecting is that this breakout, it fails. We don't hold, or at least on a weekly closing basis, we either park back on or in close enough proximity to the primary bear market downtrend line that comes off the 2021 highs. All the better if we could have a big red candle down through there tomorrow. You know me, I'd like to see a little upside right now, but who knows? I'd love to see it in the morning. Get a little bounce out in the morning, get to where we need to be, and get short for an end of day dump. It's kind of what I'm favoring and looking for. I'll take it as it comes. I can't will it, wish it, but it's what I kind of see. In other words, QQQ pops up, or futures rip overnight, go up overnight, and we pop in the open, we run up. I get a book profits on my longs, get back short again for an end day dump, and brings Tesla down here and solidifies those sell signals on the other market leading tech stocks, and that will make it a little more comfortable to go home short on Friday. Because remember, even as a futures trader, futures are 23/6, I call it, trading. They trade 23 hours a day, meaning they only shut down from 5 to 6 p.m. Eastern every day for a reset. Other than that, they're trading around the clock, and then they end on Friday evening, and they pick back up on Sunday evening. So you have, pretty much 6 days a week, 23 hours a day. But so that is Friday, then is the one day that even futures traders have to accept overnight risk. What I mean by that is ETF and stock traders have to deal with it every day. Every night, you got to think heavy about what you're taking home, because you're subject to big gap downs on the indexes, or especially individual stocks. And so again, that's one of many reasons I trade futures. I don't have to worry about that because I can set stop losses on NQs and ESs and RTY, things that are very liquid all around the clock. Even though the volume is lower, they're still plenty liquid, and you can use. And I do stop loss orders, sell limit orders, and not worry about having a horrible execution. All right, that's that. What else? Well, let's not. I covered the big techs. Let's go to everything else. Somebody asked me about CMG. Told them I'd follow up in this video. So the last update I gave you on Chipotle, and you can always check the symbol tags. There's under the resources. There's at the bottom of the page. Find what you're looking for. Type in the symbol. So this was the last update I gave you. Shared it on April 8th in this video titled "Swing Trade Ideas" as a short trade idea with a sell signal. These were my annotations from the video. I just paused it. Sell signal come on a break below the trend line. And I highlighted the last time we traded CMG, it was a short trade, and we shorted it off that divergent high down, hit these targets here. And so now I haven't updated it since. So a lot of these stocks, somebody commented, I throw out a lot of trade ideas, not just commodities, all kinds of commodities, ag commodities, industrial commodities, energy commodities, bonds, not just treasury bonds, corporate bonds, junk bonds, muni bonds, and then the realm of stocks. Over the years, I've gone more and more to trading futures for the reasons I mentioned, around the clock liquidity, the leverage factor, And for me, probably the biggest part is the tax advantage. They're huge. It's huge. 60% long-term gain, even if it's a day trade. You don't have a whole one. You don't have to worry about holding it for a year or more like stocks to qualify. You get it no matter what your holding period, 60-40 long-term, short-term gains. So that's makes a big difference at the end of the year tax-wise. Again, if you trade futures, I don't have to tell you that. But now, with that being said, where I'm going with this is I'll throw out all these trade, and I do still trade individual stocks. I have multiple accounts. I tend to put them in accounts that I'm not trading as actively in. But and I do take quite a few, but not a lot. I don't take. I just can't take. I have other positions. I'm maybe covering a sector, covering 20 different stocks in there, and showing you the 20 I like bullish, and I might take 3 of those, and I can't take all 20. And so you understand that, I think. So that was the breakdown. That came. This was a trend line. So we never. Again, I didn't covered that in April, and then boom, there was your sell signal. Back test. One day, little pop above the trend line, but it's still the divergence is the main reason I was looking for a big reversal in this one. Finally came, and this is I wanted to point this out. This is I've traded a lot of different market conditions, including bubbles, euphoria, even the .com bubble back in the '99. That one was classic. And these kind of things tend to happen where you have a lot of stocks doing what I call defying technicals, clean trend line breaks, big divergences that keep building it. The stocks keep shrugging it off. We've seen that certainly in the equity markets for months now. And then quite often, and this was just it's that final capitulation. That's a buying climax. I talked about that earlier, I believe, on IWM and the small caps. You see where you're going up, and then you go vertical at the end. You pop back above the trend line for a single day. That was one day, a doji candle, and then followed by a big red reversal candle the next day. And but you can see the spike in volume, and that's indicative of a buying climate. And now, in hindsight, we can say definitively it was. So all I'm trying to tell you, because I get a lot of comments lately about everyone talking about, someone was angry the other day, a lot of things going vertical, and that is the nature of the end phase of a strong rally quite often. So keep an eye on that. And then, so where did it go from here? This is boom. This was support. This was support. And now my answer was, look, we put a doji in on the 200 days. This is the blue line's a 200-day simple. The red line's a 200 exponential. I don't have a position. I didn't take this one. It fell off my radar. That's why I haven't covered it since. But I could tell you it'd be a good time to cover it on the 200 days. Buyers are likely to step in just like they did back here on the pullback to the 200s, and just like they did back here in a bull trend on the pullback to the 200s, and just like they did there on the bull trend, and just like they did right there on the bull trend. And when you break the 200s, then you're in a bear market, right? That was COVID, and there was a break of the 200s, a bear market. All right, so that's that. You can look at the 60. Can't make a strong case. Would I buy it here? No. Would I cover it if I was short? I'd either cover it or set a stop loss and let it run, because I do think the market in the coming weeks to months is headed lower. In the coming days, I'm not so sure. In fact, I'm looking for maybe an update tomorrow. So, but ultimately, this is where I think it'll, once it takes out the 200 days, it's coming down to 43, 45. All right, meant to get to net gas earlier. So yesterday, and I'll have soon another end-of-day chart updated. So in yesterday's one in the comment section, let me find my chart for nat gas. Here we go. So nat gas, I've been showing it lately and put some trade ideas out on the 60-minute chart. Change the color here. This is a daily chart of natural gas. We're going back here to 2018, right? This is a long-term chart. This is pretty much the floor. It has been the floor. There's no set number. Natural gas goes to zero. It means they're giving away free. So, there's always going to be a value on natural gas. We're still, despite Biden's big green plan, we're still using plenty of oil and natural gas. And you can see it's just it's a floor when COVID hit and earlier this year right there. However, that's an extreme, and I will say, and this is what I did say in yesterday's, this is an end day, so this is showing end of day yesterday. This is not reflecting today's price. So my reply in that comment section was, And I posted this chart just showing that, hey, we weren't there. We were there at that point in time when I sent it. We were at $2, and I said, look, that's pretty good support. You can see right here, support. You can see there, major reaction high. You can see it was the top of this basing pattern here. And so, as much as the breakdown, let me get to the 60. I've actually moved over to 120-minute chart on natural gas. Let me find it here. Here we go. All right, so this is the last entry I highlighted at about 214. That was a previous low there. Again, we're zoomed out. I moved out to a 2-hour candlestick chart, 120-minute, just to encompass this whole thing. And so that was it at $2 yesterday. So that was good support. So they're very likely to buy it. And they did. And they had a nice day today. And look, we closed right up there. So bottom line is that breakdown was bearish. And it is where, as I said, that's where a logical stop would have been. A tight stop, especially under that level. But this is also the next level, whether, yesterday you want to go long there or extend a position. All I can tell you right now is it's a breakdown. It would be uber bullish if this breaks out, and I think it will. I think it's going to, I'll tell you why in a second. Well, okay, you can see my positive divergence here. Still has the same divergence I was highlighting before, especially on the 60. I'm sorry, the 120, it shows better. But this was a drop below a pretty significant near-term support. You have a nice clean downtrend line. So if it can pop that, it's going to go on. These were the targets I gave you recently on the 60-minute chart, and I still maintain. I know those are aggressive targets. Those targets are way up there. We're talking almost a 50% or so rally in natural gas. Why is that possible? The price action sucks lately, no doubt. But this, I have a different one marked up. I didn't have all the levels. This is big divergence. And here, let me find the one I have for you. I think it's on the weekly. Nat Gas Weekly. There it is. Yep, this is the one. I've shared this with you a few weeks back and several times since. I just showed it to you on the daily, but this is on the weekly chart, weekly candles. Big divergence. Just like you had divergence here. All these were divergent lows. You can see all my divergent lows. I'm going to just show them real quick. This one, you got that. 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 So that's it. So Nat Gas is already coming off a divergent low. It's pulled back to the $2 support level, which goes all the way back here to 2012. And again, these are two extremes. Is it possible? Yeah, and I'll tell you again, if it loses $2, it's probably going to go there, and then you're going to lose. That's about a 33% drop. It's going to lose, 25 is going to lose a fourth of its value there. Again, all I can tell you, it's objective here. But we just rallied back into resistance today. So all you got to do is pop today's highs by a little bit, and then this could run. And based on the scope of these divergences, there's a lot of upside in that gas. We just need to see the turn. It's had a few fits and starts, can't get going. You know me, I like to spread my bets, throw it out and everything, and so it's a way to diversify too. Like I said, it's a widowmaker. If this thing could drop, go down that 150 level in short order. Did it before, did it again here. It's not my preferred scenario, and if it does, I'll be talking about it down here. But right now, if it can pop pretty much today's highs, which was resistance as I just showed you, then it should run. Crude oil, let's talk on that since we're on commodities. This is a 6-month chart with 2-hour candlesticks, and this one just couldn't be playing out any better. I've had in the last couple months when I've had trades on the indexes, long or short, most have been short. I've laid out in almost all those cases when the time was right, hedges, treasury bonds, the 30-year bond, crude oil, even times going long, short, gold, silver before that, and they've all worked well. They've offset any losses in most cases, and then some. This one's been working great. And again today, crude closed, the futures closed down. Right now, I'm looking at another monitor. They're down 0.75%, 0.76%. And so, but actually, here's a day where I'm using that as an indirect hedge. But I've had a great day on trading the NQs, swinging it down, adding on that pop in the open. Like I said, that was an objective short entry, covering right off the lows at the trend line today. We'll see if the current long plays out. And then the crude short, I'm still leaving on right now, even though I haven't pulled that off. That one I'm showing you right here. We have, this was, again, the case to be short was right here. This is where I shorted it to begin with. We had a trend line break, bearish rising wedge, divergent high, just like this divergent high. And just recently, we rallied back. You can see this is resistant. It was the base right here, this topping pattern. We broke down, we back tested there, got rejected. We tried to take it, but couldn't, failed again, and we're close enough, today, at least we were at the highs. So this one, if crude breaks, here's the range we're in right now. Crude's probably going to come back down bottom of the range and very well make breakdown below it. Let me see if I have anything on the 60. Maybe get a little trend line going now. Either way, for this point in time, I'm just leaving it on for nothing else for the sake of diversification, even though I'm not currently short. And we're still in the orange zone. Remember, this also plays into my analysis with the market. Last time I put a post out back in April saying crude was in the orange zone. The market's not going to like it. That's a danger zone for the stock market. And we had the biggest correction the entire year in the stock market and crude. So we're here again. You can't have your cake and eat it too. All the cheerleaders on Bubble TV were cheering the latest CPI report when I told you that this is June. Does that mesh? The biggest spike rally in crude in many months, and they're telling you that inflation actually went down? No. And I know crude oil's doesn't have the weighting that the housing does. Housing, is the biggest owner's equivalent rent. It's biggest weighting in there and other things. But this has trickled down inflationary and immediate, much more immediate impact. And so the CPI, we all know, is flawed. It's not perfect. They do their best, whatever. But either way, my point is the market can't have its cake and eat it too. If crude continues to go up, the market's going to take it on the chin, especially if it gets in my red zone. And then I will be short. And I may continue to stay short USO if it tells me to, but I'll be making money on the stock market falling, because if I'll eat my hat if crude goes up here and the stock market goes to new highs and is rallying then. I guess that's it. KRE, one of my favorite shorts, regional banks, right at that, nice reversal today. I tried to start out of the gate green in a hard fade. This is one of my biggest positions. I'm staying short this right now, like this. They're going to take that, will most likely take IWM down with it. And, we can go over the individual names if you want some. There's TFC. I like this one better. MTB, if you want an individual name. Divergent high at resistance. T1, T2. You can see my two targets. So this one, first target will be a drop of almost 6%, then a drop of 10.5% down to T2. Huntington, Regions, CFG. I like this one at resistance right there. And target pull back to the downtrend line at minimum. Those are minimum targets, by the way. EWBC, East West Bank Corp. Love it here. Short here down to T1 and then T2. This one, if my targets are hit, try to grab a level. I'm going to grab a little high and stop above it. About 13% of my first target and about 22% of my second target. Probably give you another trend line here. Yeah, if that trend line's taken out, that's going to open the door for a move down to T2. All right. What else? Financials. I've been telling you that, the banks, everything that was good recently, and I know that hard full court press on by the market cheerleaders was on that, this is healthy market rotation. And again, maybe it will prove to be that. To me, it looks like the final gasp. See these blow off tops? This is a blow off top. This is not, it is a breakout to new highs, but it's also, you've got volume surging, the same thing on the small caps, like I mentioned. This is very indicative of a selling climax, guys. A buying climax, I'm sorry. That huge volume with that near vertical spike. Same thing on the home builders. Remember, this one got you short here. Told you to cover, go long right there on 96, 93, 200-day moving averages. price support, price target hit, downtrend line broken. So there's one of the vertical ones that, and again, it's going to be faded soon. All it did is just made a ever so slightly marginal new high, big reversal stick today, negative divergences, and it will most likely go down with the small caps and the mid caps. And if and when this is broken, the recent lows, that's going to be the 200 days taken out. That support level will go down to my next target there, 89.45. So a lot of meat on that bone right there in the builders. This was just a short covering rally, short squeeze in my opinion. And then last but not least, let me just take a peek at treasuries. I've been keeping a rough eye on them lately. Nothing big going on there. But we did put in a divergent high, as I believe I covered the other day for you. And that should throw us back down into the yellow zone again. Oh, that reminds me, yeah, Euro US dollar. Somebody said thanks for the heads up on the miners. We went a bit higher. Last update, I told you we were right here at that previous high, and I highlighted we had negative divergence. We'd come full circle. We went a hair higher. ECB announced today they were sitting tight, and so you had a lot of movement here. So we're now. I'm gonna tweak. No, I'm gonna leave the trend line where I had it. That's that minor trend line. This is, I believe, the end of the run of the near term for the euro. So the euro goes down. It typically pulls the stock market, gold and silver down with it. And that's so far that was the case today. So on the last update, I gave you gold on the 60, told you had a divergent high. It went slightly higher, just simply extended that negative divergence that was already in place when I covered it 2 days ago. And nice reversal there. But it's at my first target right there, first support 225.40. But based on the scope of the divergence, everything else, these were the last two divergent highs, and they led to pretty good sized drops. Gold's it's been a swing trader's vehicle. Investors are making nothing on gold since the beginning of April. Now it's gone silo up down up down up down. So I don't even have a position right now in it. I'm just covering it for you, but that's silver. Got you in here long, got you out there long, and boom, it hit that trend line today. It's at support, but based on the divergence, normally I might be buying it here, but I'm not based on the outlook of the euro. If it takes out the trend line, it's going to go down here to that 26.19, which was a downside short target from when we shorted it here and then covered it there. So that would be your next stop. If that level goes, no, I'd give you another level. If that level goes, 25.20 would be your next stop there. And of course, for gold and GDX go down, gold and silver to go down, GDX does too. So I gave you this divergent high the other day. That was a divergent high. That was a divergent high. Drop, drop. So this is just bigger divergence. It's only extended, so it has the potential for a much bigger drop. And keep in mind, guys, GDX has the word gold in it, but it's not gold. It is not a commodity. It's not a precious metal. They're gold mining stocks. And if the stock market, whether it's today, whether it's tomorrow, next week, or 6 months from now, goes into meltdown mode, from my experience, even if gold rallies and gets a flight to safety bid, I've seen quite a few times where the miners get sold down because they are indeed stocks. They are equities. So keep that in mind. Right now, when everything's kind of hunky-dory and healthy, the gold mining stocks are simply going to go up and down in a multiple of gold. They're going to go up and down maybe twice what gold goes up or down in percentage terms. But there are variables you want to watch. One of those is gasoline price or fuel oil prices, because that's a big expense to them. And the other, of course, is what's the stock market doing. And again, 99 times out of 100, the stock market is not in meltdown mode, or 99.9 times out of 100. You got to be, the ingredients are very unusual to get those sudden, swift moves down. COVID happened because the government shut the market down. But there's been plenty others, 2018, the fourth quarter, and some big drops and flash crashes in between there. And then, of course, 2008. So it doesn't happen often. But again, the ingredients have been building and they are in place now. You just need the proper catalysts, and those catalysts are the support levels that I started the video with, and other technical check marks we need to get on the market leading tech stocks and some other things. All right, I think I've answered every question, at least the ones that I saw. If I missed anything, put it here under this video. I'm shutting down for the day, so I'll try to get to that tomorrow. And we'll see. We'll see what the futures do tonight and how things look tomorrow. But like I said, it looks as if we can hold the lows, even if they want to just take it down for a quick punch out, clear out the stops below today's lows overnight in the futures. That's why I would, my stops will be a little out of range for that. They might want to do that. Anything more than that, sure, we could wake up to a hard down tomorrow. There's been just a lot of breakdowns lately, a lot of check marks, if you will, but there's still plenty of support levels. So far, it's just a run-of-the-mill pullback, right? If you just want to look at it with glass half full eyes. And 5% drop, 50-day moving averages coming up, trendline support, even bigger support levels below. But yeah, so we'll see. We'll take it one day at a time. You guys know my thoughts. We'll see where we go from here. This has been Randy Finney with Right Side of the Chart. Have a great day.